I think what's fueling it is there is still a ton of spending on the AI chips that Nvidia makes. So I think the downtick was concerns that spending might abate. Also, that they might have some issues with their next generation of chips, and I think the recovery has to do with a lot of recent data points suggesting that spending on AI just isn't slowing.
The anticipation surrounding Nvidia's second quarter earnings report is palpable. Scheduled for release on August 28th, this report is expected to showcase significant revenue growth, with analysts forecasting $28.46 billion in revenue, more than doubling the $13.51 billion reported for the same quarter last year. This level of growth is almost unheard of, even in the tech industry, and it's a testament to Nvidia's dominance in key sectors like AI and data centers. With its stock price soaring and investors eagerly awaiting its upcoming earnings report on August 28th, market analysts, including Jay Woods from Freedom Capital Markets, are making bold predictions about Nvidia's future. In this video, we'll break down why experts like Woods are advising investors to buy Nvidia stock and hold on to it for the long haul. We'll delve into Nvidia's strong historical performance, its critical role in the market, and the AI-driven growth that's fueling its stock's upward trajectory. Earnings report anticipation. Jay Woods, Chief Global Strategist at Freedom Capital Markets, has emphasized Nvidia's pivotal role in the market, particularly given its influence on major indices and ETFs like the SPDR S&P 500 ETF Trust and the SPDR Select Technology ETF. Nvidia has become a bellwether stock, meaning its performance has significant implications for broader market trends. As a result, the upcoming earnings report is not just crucial for Nvidia, but also for investors with broader market exposure. One of the reasons Nvidia is so highly regarded on Wall Street is its consistent ability to outperform expectations. The company has beaten revenue estimates for 7 consecutive quarters and earnings per share, EPS, estimates for 6 consecutive quarters. This track record of outperformance has helped build investor confidence, contributing to the stock's impressive gains over the past few years. Nvidia's ability to consistently deliver strong results, even in challenging market conditions, sets it apart from many other tech companies. This reliability is a key reason why analysts like Woods are bullish on the stock's long-term prospects, despite the near-term volatility that can accompany any high-growth stock. The market influence of Nvidia. Nvidia is not just another tech stock, it's a cornerstone of the modern tech ecosystem. As Woods pointed out, Nvidia's influence on major indices and ETFs cannot be overstated. In fact, Nvidia has now surpassed Apple as the second largest holding in the SPDR Select Technology ETF, with Microsoft holding the top spot. The rebalancing of this ETF underscores Nvidia's growing importance in the tech sector and the broader market. Woods even went so far as to say, "You better know that Nvidia is now more important than Apple." This statement highlights how Nvidia's role in the market has evolved, especially as the company continues to push the boundaries of AI and data processing technologies. The investment strategy. Given Nvidia's strong market position and growth potential, Woods offers a straightforward investment strategy. Buy Nvidia stock and don't look at it. This advice reflects a long-term investment philosophy that focuses on the company's potential to deliver sustained growth over time, rather than trying to time the market or react to short-term fluctuations. This strategy is particularly relevant in the context of Nvidia's current market environment. The stock is part of the so-called Magnificent Seven, a group of tech giants that includes companies like Apple, Amazon, and Microsoft. These stocks have been in a consolidation phase recently, which could signal a period of relative stability before the next major move. For long-term investors, this consolidation phase might represent an opportunity to buy Nvidia at a reasonable price before the next leg up. Why the bullish sentiment on Nvidia? Nvidia's growth trajectory has been nothing short of remarkable. Over the last 4 quarters, the company has reported year-over-year revenue increases of 102%, 203%, 266%, and 262%, respectively. These staggering growth rates have fueled a bullish sentiment among investors and analysts alike. In Q1 of fiscal 2025, Nvidia reported revenue of $26 billion, marking an 18% sequential increase and a 262% year-over-year increase. The majority of this growth came from Nvidia's data center segment, which accounted for $22.6 billion of the total revenue, representing a 427% year-over-year increase. This segment's explosive growth is largely driven by the demand for AI infrastructure, where Nvidia's GPUs play a central role. The AI revolution is arguably the most significant technological shift since the advent of the Internet, and Nvidia is at the heart of it. The company's GPUs are essential for training large language models, LLMs, like OpenAI's GPT and Meta's Llama 3. This has contributed significantly to the growth of Nvidia's data center revenue, as more companies invest in AI capabilities to stay competitive. In its Q1 report, Nvidia highlighted major AI infrastructure deployments by companies like Tesla and Meta, both of which are using Nvidia's GPUs to power their AI models. These deployments underscore Nvidia's central role in the AI advancements that are reshaping industries from automotive to social media. Moreover, the global push towards sovereign AI, where countries are investing in domestic AI infrastructure to reduce reliance on foreign technology, is another tailwind for Nvidia. This trend is expected to generate high single-digit billion-dollar revenues for the company in the coming years, further solidifying its leadership in the AI space. Nvidia's Q2 revenue outlook. Looking ahead to Q2, Nvidia anticipates a 107% year-over-year revenue increase, projecting revenues of $28 billion. This expected growth justifies the company's high forward PE ratio of about 41, which might seem steep at first glance but is well supported by Nvidia's earnings potential. Wall Street analysts remain optimistic about Nvidia's future, with a consensus rating of strong buy and a current price target suggesting an 11.44% upside potential. This optimism is grounded in Nvidia's continued dominance in AI, as well as its ability to deliver strong financial results in the face of increasing competition. Analyst outlook. Top Wall Street analysts, including Rick Schaefer, predict strong results for Nvidia's second and third fiscal quarters, driven by robust performance in its data center and gaming segments. The data center business, primarily led by the H100 GPU, accounts for 87% of Nvidia's total revenue and is expected to grow by 136% year-over-year. Upcoming products like the H200 GPU are also expected to contribute significantly to future growth. While gaming now represents a smaller portion of Nvidia's revenue at 10%, it remains a key driver of the company's success. The segment is expected to see a 6% growth quarter-over-quarter and a 13% increase year-over-year, maintaining its dominance in the high-end gaming market. Additionally, Nvidia's automotive business, though a small part of its overall revenue at just 1%, is projected to grow by 35% year-over-year. This growth is supported by a $14 billion pipeline and significant design wins in new platforms, highlighting Nvidia's expanding footprint in the automotive sector. Why does Nvidia remain undervalued? Despite its impressive past gains, Nvidia's stock is still considered undervalued by some analysts. For instance, Rick Schaefer points out that Nvidia is trading at 29 times his CY26 estimate, compared to a 5-year average of 36 times. This suggests that, relative to its historical valuation, Nvidia still offers a compelling investment opportunity, especially given its strong profit margins and leading position in AI technology. This view is echoed by the broader market consensus, which sees Nvidia as a stock with significant growth potential. With price targets suggesting an upside of 11.516% in the near future, Nvidia continues to attract strong interest from investors who believe in the company's long-term prospects. Conclusion. In summary, Nvidia's strong historical performance, critical role in the AI revolution, and robust growth outlook make it a compelling long-term investment. Analysts like Jay Woods and Rick Schaefer are confident that Nvidia will continue to deliver strong financial results, driven by its leadership in AI and data centers. Woods' advice to buy Nvidia and don't look at it reflects a long-term investment strategy that focuses on the company's potential to generate sustained growth. While the stock may experience short-term volatility, its strong fundamentals and market position suggest that Nvidia is well positioned to deliver significant returns over time. For investors looking to capitalize on the ongoing AI revolution and Nvidia's dominant market position, the message is clear. Buy Nvidia stock, hold on to it, and watch your investment grow